because I have experienced this myself, how digital finance can really help financial inclusion. Before I joined the World Bank, I was chairman of a bank in Indonesia, which focused on creating a digital platform for micro lending to women. And we were able to help 5 million women-owned enterprises. So I really believe that financial inclusion is critical for alleviating poverty, boosting shared prosperity, and now with the COVID-19 pandemic can really also aid the recovery, as well as continue the link it to the social protection programs that will still be needed, that were implemented and will continue to still be needed. And having an account is the first step to economic mobility and access. It allows people to send and receive payments and opens the door. This is, I think, the more important aspect, opens the door to broader financial services such as savings, credit, and insurance. And it has also been shown to reduce extreme poverty and increase savings among women-headed households. We used to always say these are the productive poor that really are poor, but they can be productive. Yet many remain excluded. The World Bank's Global Findex database highlights that while we have made significant progress, 1.7 billion adults worldwide, so 1 out of 3, remain financially excluded. And even though they 2/3 of them own mobile phones. Furthermore, women, youth, and those in extreme poverty continue to make up a greater share of the excluded. The gap in women's financial inclusion is being perpetuated by an underlying gap in mobile phone ownership. So with the onset of the COVID-19 pandemic, we are seeing that for the first time, poverty went up. And not only that, we estimate that between 143 to 163 million people will fall back into poverty by the end of 2021. And women are disproportionately affected by the COVID-19 pandemic. And therefore, the crisis is prolonging the dip in women's empowerment, with compounded impacts for those already living in poverty. So reaching the world's most vulnerable has proven anything but easy in countries with underdeveloped telecommunications and payment ecosystems or infrastructures, as we found in designing the response to the crisis in the last 1 year. And there has been an acceleration of the building out of such system. And as the crisis response continues, there is, in fact, as we always say, crisis is opportunity. So this crisis, like other crises, is an opportunity also to design responses that can respond to the immediate issues of emergency and social protection and support, but also builds back better for the future by harnessing innovations. And innovations in digital finance can really help lower the cost and increase the speed, transparency, security, and availability of digital financial services to the poor. Digital payments, remittances, and mobile money can really help reduce key barriers to financial access, particularly for women who face more hurdles accessing finance. Digital finance plays a key role in an integrated approach for a green, resilient, and inclusive development that we have been really promoting because it facilitates socially distant, contactless financial transactions, improves access, and helps governments extend financial assistance and liquidity more quickly to vulnerable people and firms in need. And once there is a recovery, this can also then be used to help further development and empowerment. So to ensure women, rural adults, and other vulnerable populations gain access to financial services, collaboration across both the financial and ICT sectors is critical. And this is really what the FIGI initiative is all about. And the lessons drawn from the FIGI initiative will help inform actions in other countries as they seek to harness the power of digital finance and telecoms to serve the poor. Furthermore, I just want to emphasize, I think everybody here knows this, but I just want to emphasize that it's not just about financial access, obviously, but also financial literacy, to know how do you use your financial access use broader financial services, whether it's credit, whether it's insurance, or deploying your savings better, financial management, that will improve livelihoods. To this end, the FIGI initiative has played an important role to enhance collaboration and address challenges. But I really am very happy with the cross-sectoral collaboration that has been encouraged in FIGI by design. And as we all know, this is a unique partnership between the World Bank Group, the International Telecommunications Union, the Committee on Payments and Market Infrastructure, and the Bill and Melinda Gates Foundation. So I'd just like to also appreciate our partners in this. And through the technical working groups, country support, and symposia, FIGI partners have developed cutting-edge knowledge, tools, and recommendations which encourage reforms. I know you will shortly be hearing more about Mexico this morning, but let me tell you a little bit more about what happened in another country, which is Egypt, where we were able to support policymakers in their efforts to strengthen their consumer protection regime, establish new oversight functions, and inform the issuance of a new banking law, which includes a core focus on enabling financial inclusion through digital financial services. So FIGI has also been able to put down the groundwork for a new digital financial inclusion commitments in Egypt. And we have recently provided a development policy loan of over $1 billion to support Egypt's private sector and inclusive growth, with digital finance being key components. So inputs and technical support from FIGI have also catalyzed 2 development policy financing projects in Mexico. So Secretary Herrera has been key in this, including over $1 billion to support financial inclusion, electronic payments, and a digital identification system, which many could argue is kind of the prerequisite. Moreover, FIGI's lessons learned and the knowledge it helped to create are already being applied by many policymakers around the world, including Pakistan and Morocco. We have seen authorities leverage FIGI tools. And during the symposium, I think we heard representatives from Brazil and Bangladesh share their experience applying FIGI tools and providing insights on their risk-based approach for eKYC regulation. And I believe that FIGI has also underpinned the new partnership between the IMF and the World Bank Group to craft new guidance together to support emerging market developing economies in strengthening the cyber resilience of their financial market infrastructures. And I know that Mexico has been one of the core countries contributing to FIGI. A number of representatives from the financial and ICT regulatory authorities have shared their perspectives throughout the FIGI Symposium on how to enable digital finance to advance financial inclusion. So I would like to thank Mexico for championing this. And in this context, I'm very pleased to introduce our keynote speaker today, Secretary Arturo Herrera Gutierrez, Mexico's Secretary of Finance and Public Credit, who has championed financial inclusion, financial literacy, and women's financial access, pushing through key reforms as noted within Mexico's 2020 National Policy for Financial Inclusion. He is also a central member of our World Bank's Advisory Council on Gender and Development. I look forward to your address and your perspectives from a Mexico angle and lens, and the lessons that we can all learn from you. And I'm sure all policymakers will learn by hearing from you. So the voice from the ground. Thank you very much. And I'm delighted to hand the floor over to Secretary Herrera. Over to you, Arturo.
Thank you, Mary, and thank you very much for the introduction. It actually makes a perfect setup for what I was planning to do. And since last year has been dominated by conversations about COVID, I would like to make some reference to what the world used to be before COVID. And one is has a direct connection to one of the topics that you mentioned. In the very, very, very old times, when we used to talk about how deep a financial system was, or a banking system was, we used to talk about the possibilities that a robust financial system would provide to growth in a country. But then we learned that having a financial system that was growing was not sufficient if it didn't provide opportunities for everybody. Then the issue of financial inclusion became important, and it was relevant not only for growth, but also, as you put it, for shared prosperity. So let me, although it looks like ages that since we have been living in a world without COVID, let me try to remind everybody what were the dominant conversations just 18 or 19 months ago before the first case of COVID. And in my view, there were at the global scenario three very important topics. One was trade conflicts, and particularly the conflict between the US and China, and that was the major issue in 2019. Another one was climate change. And the third one was issues related to inequality. And particularly related to inequality is the issue of financial inclusion. Now, as COVID started hitting during 2020, it has a huge impact in world economics, and an impact that that the world has not seen since the Great Depression, or it could be even worse. Let me just share with you a couple of numbers that may help to frame the conversation. In October 2019, during the annual meetings of the World Bank and the IMF in Washington, the IMF released the official forecast for growth in 2020. And they were expecting an increase of the economic activity worldwide of 3.4%. Actually, what happened was a reduction of 4.4%. That's an overall difference of 7.8%. Now, let me tell you what does a number like that is. 7.8% is slightly larger than the whole economy of Latin America and the Caribbean. So it is like if COVID has given a bite to the world economy of the size of the whole sub-region. So that gives us an idea of how serious was the economic impact. But although every single country has suffered from the effects of COVID, the effects were unevenly felt across the economy and across social groups. There are very obvious sectors that were the mostly affected: services, hospitality, restaurants, airlines, etc. But there was also an uneven effect across social groups, and that's extremely important. Let me give you a couple of numbers. In Mexico, we lost 12 million jobs, and we got all men and women which were unemployed. But the unemployment of women, which was 16%, was twice as much as that of men. A big chunk of the support that families, particularly in the countryside, in my country, receive, come from remittances, particularly from the US, which, as financial inclusion has increased, the migrants in the US has found ways which are more efficient to send their resources. Last year, they sent close to $40 billion. So actually a little bit more than $40 billion. Well, migrants in the US, their unemployment rate increased from 6% to 17%. And also when we look at the level of the small and medium enterprises, small enterprises got a reduction in the access of credit of around 6.3% by 2020. So the point is, although COVID hit everybody, hit some groups harder than others. And that's pretty much related to the issue about inclusion. And that's one of the things that financial inclusion should help to try to solve it. Now, how do we operate it in this context? And what things were preparing us to actually try to do some things that were relatively successful? And of course, these were plan of the strategic development of certain areas, because nobody was prepared for COVID. It just was by chance that we prepared this in advance. So let me mention the first one. We made great advances over the last few years in fintechs, and particularly we were able to pass a fintech law in 2018, and we were in the process of of approving financial regulation and approvals of actual fintech companies. In 2019, we increased the social safety nets of the country, and we took a strategic decision that made the transfers directly to bank accounts. So actually, we were preparing a large system that transferred directly from our treasury to the final beneficiary, something that ended up being extremely useful by the time that COVID hit, because as social distancing measures were prevalent, we didn't need to access directly and personally the people who were beneficiary, but actually made transfers. And actually, we did something that we thought it ended up being really important. When at the peak and at the start of the lockdown, we decided to transfer in advance, particularly to the elderly, some of the monthly payments, so that they didn't need actually to go out to receive their payment, but also they didn't need to go out more than once because all the resources were there. And something that I want to refer a couple more of times during this chat is we have a very, very large program that increases scholarships for students at high school and college. And that was very important for us in terms of financial inclusion, because that one thing that we have learned over the last few years in Mexico is that having the supply of product on the financial sector is not sufficient for people to start participating in the economy using financial services. The problem of adoption is very important. Now, the problem of adoption is different according to groups, and also particularly different according to ages. So the students in high school and the students in college were more prone than most of the population in Mexico to have a cell and to do many things through their cellular phone. So this is the one program in the country, the one social program, which operates directly through an electronic transfer. But what was very interesting to us is that we actually opened an account for the students, but most of the students didn't opt to actually get a debit card associated to their scholarship account. They started to operate all their financial transactions through their phone. So those things that we were doing for unrelated reasons end up being very helpful at the time that COVID hit, because that was kind of the line growth to prepare a response that needed less personal interaction. So let me give you some numbers about what actually happened now during COVID. Electronic commerce grew by 22% during the lockdown. The central bank in Mexico developed a system that allow to make payments from a cellular phone, from a mobile phone to another mobile phone, and have an increase in the second semester from a relatively low base of close to 50%. So COVID was a really important and very damaging phenomenon to the economy. But on the other hand, it opens certain opportunities for financial inclusion, and we should be able to build on that. Many fintech and financial commerce move forward their business plans. Some of them told us that they move 4 years forward their business plan. Now, that has provided a context in which we need to dig deeper than that. But these conditions are not sufficient. One of the major problems that we have in Mexico, and that's something in which we are currently invested, is that we have an uneven access on digital matters. There are sectors and areas of the country that have no access to mobile phone or to internet. And we understand that this is a public good. The market not necessarily solving, because the fixed cost of taking a line to a remote village is probably much higher than the immediate business opportunities that provide. So one thing that we are doing is, and we expect it that in the next 2 years, we will be able to deploy a network of internet that will bring internet access to almost 99% of all the country. That we think is a very important prerequisite to actually have a full financial inclusion in our country. Let me, Mari, now refer to two topics that you mentioned in terms of the ability of financial inclusion to close inequality gaps. I'm going to start by one that you specifically mentioned, and then I'm going to refer to one that you didn't mention. I'm going to refer to the one about females. And just before that, let me share with you some numbers about how concerning these issues related to financial inclusion in Mexico, both when we look at it by itself, but also when we look at it compared with some other countries. For example, only 29%, or around 30%. Only 50% of men have a retirement account, but only 33% of women have a retirement account. So this is a gap of 18 percentage points. Only 31% of all adults in Mexico have a savings account, and only 54% of people in Mexico have any kind of financial product. Now, people may think that that's a characteristic of developing countries, but our numbers look actually really bad with our traditional peers. For example, only 30% of adults are in the financial system, while in Chile is 70%, almost twice as much, and in Brazil 74%. And the average for Latin America is only 55%. So financial inclusion is something that is extremely important by itself. But it just happened that in a country like Mexico, for reasons that is very difficult to understand, we start lagging very strongly, even with respect to the countries that we typically compare. So what about issues related to gender and financial inclusion? And let me share with you a twist that we provide to this approach recently, actually over the last probably 5 or 6 weeks. One of the issues that we were concerned how the financial sector was not unfolding sufficiently fast is because we may thought that at some point we may have been over-regulating the banking sector. So we start looking really carefully through the Basel lenses. What were the appropriate capitalization rates that we should have? And as everybody know, and I know that our colleagues from the BIS are connected, the capital that the bank needs to put up for any particular loan needs to be proportional to the risk associated with that loan. Then when we start looking to loans to women, we find out that with the exception of one particular kind of credit, the credit to consumer, just to be absolutely transparent, women pay better than men. So they fulfill their financial obligations better than men. But actually, if for some reason they fall in default, they actually come back faster to fulfill their financial obligations. So we thought, and we have already, I think we're in the final touches, or we will have done it, to approve an asymmetric regulation. An asymmetric regulation that is going to require that banks require to have less reserves when they lend to a woman than when they lend to a man. And this is not an equal opportunity policy. I mean, it could be an equal opportunity, but it's not an equal opportunity. It's just recognizing that as a borrowing group, they are less risky than men. So let me give you another example that did become important for us. As I said, migrants in the US earn close to $40 billion dollars per year. That's extremely important. It's a very, very large amount. I think that is now very close or even larger than the resources providing from selling oil in Mexico. Now, as you may imagine, many migrants initially moved to the US with an illegal status. So then it's difficult for them to open a bank account in the US. So traditionally, they were trying to send their money through very pedestrian mechanisms, even sending it in cash. And that's very inefficient. It's extremely risky, and they were getting very low exchange rates when they're transferring their resources. Nowadays, that's less of a problem. Close to 97% of all the transfers are done through the financial sector. But when we look to the financial sector and actually the cost that they are getting, we get a very clear differentiation about what is happening. If somebody happened to have an account, let's say in Texas, and is in a bank that is operating in Mexico, that's the cheapest way for them to send their money. If it's to a different bank, they get a slightly worse condition. But then if they have to send it to through a wire transfer, the conditions are worse. And then if they use an exchange house, the exchange rate is even worse. And then there are some things that we call exchange centers in Mexico, which are in relatively small municipalities. And probably the markup that they take over the transfers is probably close to 15 to 20%. And there are some really, really small municipalities in which you don't get those things. And they are basically changing a convenience store, the dollars. And that's where they get a really bad exchange rate. So people could be saving for a year to send resources to their family, and they could be shortchanged in 20, 25%. That's equivalent of losing 2 months of work just into the exchange rate. And that's when financial inclusion is very, very important. So recently, and I had actually the honor of being in Chicago, we start opening banking accounts for migrants in Mexico, so that they could actually, although they may have problems for legal reasons, regulatory reasons, to open a bank account in the US, nothing precludes them to open a banking account in Mexico. So they actually get all these benefits. We also reach an agreement with the Banking Association in the sense that they have to provide the same exchange rate, no matter if someone is trying to change dollars in Mexico City or in Monterrey or in a small part of the Sierra in Oaxaca. So those are some of the examples in which I guess we are going to try to invest ourselves in terms of financial inclusion, and how this affects different groups, the youth, women, migrants, small enterprises. And let me just conclude by coming back to two of the points that are raised, and are probably going to be some of the things that are going to be most demanding in terms of in the next few years. One is we need to have digital access, otherwise it's very, very difficult to really have a broad penetration of financial sectors, and we're investing ourselves very heavily on that. But the second one, and it's extremely important, and people very often overlook it, is the issue of adoption. There are cultural issues associated with that. It's not sufficient to have a financial product available. You have to work to people so that they understand that it actually helps them. Thanks a lot, Mary, and thanks a lot, everybody, for inviting me.
Thank you very much to both of you for such thoughtful dialogue. Wow. Okay, next I'd like to invite Christopher Calabria, Senior Advisor, Supervisory and Regulatory Policy, Financial Services for the Poor at the Bill and Melinda Gates Foundation, and you're going to be delivering closing remarks. Thank you.
LJ, thank you for bringing such energy and inspiration to this symposium. You've really kept this 6-week-long event moving forward with optimism and enthusiasm, which is completely in line with the spirit of the Financial Inclusion Global Initiative. And thanks as well to Dr. Pangestu and to Secretary Gutierrez for their thoughtful remarks as we close this third and final FIGI Symposium. Secretary Gutierrez reminded us that pre-pandemic, the top subjects for global dialogue were related to trade, the environment, and social inequality. When we launched this project 4 years ago, I don't think any of us imagined that we'd be conducting almost a third of this project amidst a global health crisis. The pandemic created challenges, burdens, and losses for so many. And in many ways, it may have exacerbated some of the existing social inequalities that the Secretary mentioned. COVID-19 may furthermore have opened new gaps that we need to bridge. The pandemic has nonetheless emphasized the important role that a digital economy can play. Digital financial services can help us to manage better some of the economic hardships resulting from the economic shutdowns. So the pandemic crisis and recovery has made even more urgent the many areas that the FIGI project had taken up over the past years. The criticality of electronic payments acceptances, the foundational importance of identity to enable sometimes life-saving transfers, cash transfers, and the necessity for technologies enabling these transactions from infrastructures to applications to handsets to be secure and trusted, especially by new users. FIGI's teams and partners work to support these resilient financial infrastructures and enabling policy environments. And FIGI did so in a way that demonstrates, I think, the value of working holistically across sectors and partners, not only within the financial sector's varied providers and policymakers, but with the recognition for the necessity of prevalent, resilient ICT infrastructures and providers in powering the transition to global digital financial services adoption. FIGI made progress towards universal financial access, but as we look to our next set of challenges of building back more inclusive economies, as Dr. Pangestu suggested, we need to ask clearly the question of improving access for whom. And we take up gender equity as an imperative, as the toll of global poverty and the pandemic fell disproportionately on the shoulders of women, as many have said before. We can and certainly must do better than we have. And all of you who have joined us on this journey have helped us both to imagine and to continue to build a more resilient, sustainable, and inclusive financial system. On behalf of the Financial Services for the Poor team at the Bill and Melinda Gates Foundation, I'd like to conclude by expressing our thanks to the many people and organizations from around the world who came together to support this work. 4 years ago, we set out to bring together 3 global institutions together to develop 3 sets of pilot programs in 3 countries. Our goal was to explore how we could best scale up digital financial services and achieve universal financial services access. We wanted to help accelerate our efforts to build a financial system that is digital, resilient, and inclusive, such that it would serve the needs of all, including especially underserved women, the poor, and the unbanked. We appreciated support from participating central banks, regulatory authorities, and communications commissions, including especially from our FIGI implementation partners in Mexico, China, and Egypt. We also thank authorities in many other countries and colleagues in the private and social sectors, industry participants, and development partners who participated so actively in FIGI working groups and symposia. Hundreds of people helped us to conduct this research, experiment with policies and technology, and explore how to improve both access and usage of digital financial services. To the Committee on Payments and Market Infrastructure, the Bank for International Settlements, thank you for leveraging your extensive network across central banks and bringing some of the best minds in modern payment systems to inform our thinking. To the International Telecommunications Union, thank you for bringing together leading experts from around the world to help us think more tangibly about how to connect the world's people using technology, something that your organization has been doing for more than 150 years. And to the World Bank, thank you for drawing on your extensive knowledge of markets and economies, and especially low and middle income countries around the world to help us ensure that our solutions would serve their needs and help to achieve the World Bank's vision of a world without poverty. Now, while there are many people from so many organizations involved behind the scenes, I do want to call out in particular Helen Gradstein, Mahesh Uttamanchandi from the World Bank, who led the secretariat-related work for the overarching grant supporting this effort, Vijay Murray and Bilal Jamousi from the ITU, who inspired so much of the design of the symposium, as well as were deeply active in the work, and Carolyn McMahon from Glenbrook, who provided advice to the Gates Foundation about this work along the way. What this content over the past weeks has demonstrated is the tremendous progress that can be made working together in cross-sectoral teams on a global level. I hope that it has inspired you, as it has inspired me, to think creatively about our coalition approach to making our economies more resilient and inclusive moving forwards. Congratulations on a successful symposium and on the work accomplished and shared over the past 6 weeks, but also the past 4 years. Yet our journey towards universal financial access remains before us. Please continue with us in this wonderful spirit of global collaboration. Thank you.
Oh, thank you very much to Christopher Calabria for his kind words and encouragement to look to the future. And now it's wonderful to invite Reinhard Scholl, Deputy Director, TSB ITU, to deliver his closing remarks.
Thank you very much, LJ, for the introduction, and thank you for your enthusiasm and energy that you've brought to the symposium over the past 6 weeks. I would also thank very much the thoughtful remarks by Secretary Arturo Herrera Gutierrez, the Secretariat of Finance and Public Credit in Mexico, by Dr. Mary Pagesto, the Managing Director of Policy and Partnerships at the World Bank, and by Christopher Calabria, the Senior Advisor for Supervisory and Regulatory Policy of the Bill and Melinda Gates Foundation. Distinguished colleagues, dear friends, over 200 countries have expanded social protection measures in response to the COVID-19 pandemic, many using digital means to transfer money to bank accounts or mobile wallets. These programs provide vulnerable people with an economic lifeline, and they're really the key entry point to the formal financial system. For the past 6 weeks, this symposium has welcomed over 1,600 unique participants from 149 countries. We have explored topics ranging from fintech for inclusion and gender equity to cybersecurity and digital ID, consumer protection, and experiences reaching underserved and vulnerable populations during the pandemic. We have approached these discussions from a wide variety of perspectives, thanks to the diversity of the FIGI community. And thank you all very much for bringing life to the symposium. This is the third and possibly final FIGI symposium. We have come a very long way together, creating a culture of collaboration between the digital technology and financial services sectors that will sustain for many years to come. Our journey began, and I remember this well, in 2014 with an ITU focus group on digital financial services. It was the world's first initiative to bring together all actors working to expand financial inclusion. The culture of collaboration created by that focus group gave rise to the FIGI partnership in 2017. We have built a strong understanding of the components of the digital finance ecosystem. We have clarified our respective roles in nurturing the growth of this ecosystem. And we have supported the emergence of global community where we all play to our complementary strengths to advance together. As the United Nations Specialized Agency for Information and Communication Technologies, one of ITU's highest priorities is supporting the United Nations Sustainable Development Goals, the SDGs. The ITU membership has emphasized its resolve to ensure that digital financial services make a defining contribution to the achievement of the Sustainable Development Goals. First in 2016, with a resolution of the governing body of the ITU standardization, called the ITU World Telecommunications Standardization Assembly, and then in 2018 with a resolution of the supreme governing body of the ITU called the ITU Plenipotentiary Conference. Standardization has been central to ITU's value proposition since our inception in 1865. We work at the cutting edge of innovation. Technology is always evolving in ITU's work, and membership evolves in tune. But our value proposition has remained unchanged for over 150 years. ITU builds community and trust to enable technological advance on a global scale. Digital transformation is accelerating, and ITU continues to gain new stakeholders and new members. We see this in areas characterized by industry convergence, such as smart cities, smart energy, and digital health, smart mobility, and of course, digital financial services. We see the same in fields providing cross-cutting enablers for innovation such as artificial intelligence, blockchain, and quantum information technologies, all areas where the ITU does lots of standards work. We see why the Sustainable Development Goals emphasize the importance of partnership, and we are reinforcing new partnerships by working together in ITU standardization. But creating the conditions for influential standards development calls for years of inclusive dialogue. It is important that we continue bringing different industry sectors together to define new directions of innovation and create the partnerships required to propel this innovation. ITU standards for digital finance provide for high quality of service and user experience, and they safeguard security to build trust. We also host FIGI's new Digital Financial Services Security Lab to support regulators and industry in building on firm technical foundations. FIGI has been instrumental in identifying and refining the demand for this ITU action. I would like to express our deepest gratitude to all contributors to FIGI for what we have achieved together. I also thank our FIGI partners, the World Bank, the Committee on Payments and Market Infrastructures, and the Bill and Melinda Gates Foundation. Our partnership has certainly proved its value, and ITU looks forward to exploring new opportunities to strengthen this partnership. We will continue to capitalize on the knowledge captured by the findings of FIGI's working groups, and we look forward to breaking new ground with you in our security lab. In FIGI, we see the culture of collaboration essential to global impact. FIGI is a leading example of the multidisciplinary collaboration necessary to achieve the Sustainable Development Goals. We're closing out a chapter of our work together at this third FIGI Symposium, but this story will continue with many of its leading authors part of the FIGI community. I thank you once again for your pioneering work, and I look forward to the next chapter of our collaboration. Thank you.
Oh, thank you very much to Reinhard Scholl for such well-articulated storytelling about the background and future of FIGI. Thank you all to all of the speakers in today's closing ceremony, and we're shortly going to treat you to some of the highlights, but there's just time to display our satisfaction poll that many of you will now be rather familiar with. We put it at the end of each and every single one of our sessions, and each and every single one of your responses means so much to us. We really appreciate your participation. Although we are at the end of FIGI 2021, let's not think of this as the end. Instead, we're together taking the next steps on a continued journey forward. And we hope you'll find the examples shared during the symposium useful. And we wish you much success in your ventures and helping to expand access to financial services. I'm sure the discussions we've had will generate valuable insights and pave the way to implement practical solutions to the challenges faced in the global movement towards financial inclusion. And as you can see there, friendly reminder, if you've missed any sessions, don't worry. You can watch all of the recordings on the FIGI Symposium website. There's the link there for you. And you can access the FIGI Working Group reports as well online. So as promised, before we come back to close the symposium, here's a recap of some of the highlights.
FIGI is an example of the cohesive model of behavior that will be essential to our achievement of the UN Sustainable Development Goals. This inclusive, partnership-oriented initiative has helped to clarify the contributions expected of all stakeholders in digital finance, including the contribution expected of ITU.
Digital infrastructure is critical for the functioning of financial infrastructure and the provision of DFS. By design, FIGI was implemented as a partnership between the World Bank, the International Telecommunication Union, and the Committee on Payments and Market Infrastructure, supported by the Bill and Melinda Gates Foundation.
So to do that transformation from cash to digital requires a bit of hand-holding and training and capacity building. And I could see that perhaps associations and civil society could play a key role hand in hand with government to provide that training locally to men and women who have never used a mobile phone that need to use it for payments and transaction accounts.
Representation and power matter a lot. And when we look at who's designing and implementing the systems themselves, a lot of times it's also men. And so gender intentionality is challenging if there are no women at the decision-making and policy-making table. So I've been really proud throughout the entire FIGI program, how intentionally the group has really been to ensure that every panel, every working group, every event has female representation.
So since the onset of the pandemic, what we've been doing at the World Bank is stepping up our support to authorities in emerging markets and developing countries. And we have about 170 COVID-related projects spread across 110 countries. And one of the things of particular interest to this audience, I think, is that we've launched and scaled up COVID-19 cash transfer projects in over 55 countries, with about 1 billion beneficiaries covered in active and new projects. And while digital financial inclusion was a development priority before the COVID-19 pandemic, it's really become indispensable now, both for short-term relief in terms of putting money in the hands of those who need it, but also as a central element of broad-based sustainable recovery efforts.
And central banks specifically, of course, play a key role when it comes to the solid foundations of this coffee house. As a catalyst, they can facilitate public and private sector commitment to have really a sustained commitment when it comes to financial inclusion across all segments of the population. As an overseer, they can contribute to the conducive framework when it comes to foster innovation and competition in financial services more broadly and payments in specific, and while at the same time obviously addressing the risks.
As governments advance their post-COVID rebuilding efforts, we have the opportunity to leverage digital financial technologies to build back more inclusive, secure, and resilient economies. FIGI offers relevant lessons learned that we can draw on as we build back these infrastructures and policies.
Financial inclusion is not an end in itself. It is a tool to create jobs, improve nutrition, increase access to health and education, and empower especially women. That means much more attention is needed in designing, innovating, and championing services that really help them achieve these goals.
And the pandemic has reinforced this urgent need to transition to digital, but it's also thrown that sharp spotlight on these growing global inequalities, particularly the chronic and sometimes gaping digital divide that separates the digitally rich and the digitally poor, and between men and women. DFS can be a powerful driver of development, but we urgently need to put them within reach of the people who need them. And we need to find ways to empower those people so that they may use these transformational services safely and productively, so that they can improve their own lives and the lives of their families and their communities.
Thank you once again to all the speakers and the participants for your interaction and contributions, and to the organisers and you, the audience. You're all change makers, and we appreciate your efforts greatly, especially in these virtual circumstances. It is now time to close the 2021 Fiji Symposium. Thank you all for making the time to take part, and best wishes for the future.